Let's figure out what's happening in the commodity markets. Manisha is with us now. Manisha, what are you tracking? What's top of mind?
Well, I'm looking at the crude oil prices. So with all its ups and downs and volatility that we have seen in last many days, it still continues to hold around that 4-month high. So $86 a barrel is still on the charts here. We have seen prices move in a range of 1.5% to 2% for last couple of weeks. Now, having said that, it only has been making higher highs in the recent few days there. Well, the support comes in from the fact that Russia and Saudi Arabia are deepening their cuts from August into September, and expectation that they would continue to do that in October as well. That is something that we'll know in the first week of September. But at this point in time, the markets do believe that there is some tightness that could continue going forward. What is not working right now for the crude prices is the U.S. output. That is expected to hit a record high in 2023 as per the latest EIA data. The last time we made a record was in 2019 at 12.3 million barrels per day. This year, the U.S. output seems to be rebounding, jumping back, and 12.76 million barrels per day of a U.S. output. So non-OPEC output in that sense seems to be increasing. The other thing that's not working is the U.S. inventories itself. Well, last week was great because you saw nearly 14 million barrels of a decline, which was a record in itself. But this week, the API suggests that you could be looking at an increase in inventories. The other data that's not favorable is the Chinese crude imports for the month of July. That has declined 18.8% on a month-on-month basis. This is by far a biggest decline because in this year, for most of the months, we have seen the Chinese crude imports on the higher side there. The street is also watching out for the Chinese trade data, which hasn't come in so well. We've seen double-digit decline in exports and imports as well, and much more than what the street was anticipating on an year-on-year basis as well. So whether it's about weak global economic data, the strength in US dollar index, the Fed official statement suggesting that there could be another rate hike because the inflation numbers continue to be on the stronger side, and that's exactly what the street will be watching out for now. More Fed official comments are coming in today and tomorrow, and then you have the inflation numbers. The CPI comes in on Thursday and the PPI on Friday. So those two inflation numbers from US are going to be quite of importance.
Oh, absolutely. It is inflation data that markets will have their eye on. Thank you very much for that, Manisha.